We're going to look at the cryptocurrency Algorand, or ticker symbol ALGO, or as known as ALGO. We're going to begin by looking at the weekly chart, and a couple things stand out. One is that you saw in 2021 3 failed attempts to rally and close above the 50% retracement of this massive decline that took place from June 2019 into the March 2020 low. The result of that inability to get above that key resistance level was this decline that we saw that was highlighted by this 41% decline in the middle of May. The price action since then has clearly been corrective. It did get above the anchored VWAP, which is in purple here, but over the last 6 weeks, we've seen it struggle getting above the anchored VWAP, which extends back to the November 2020 low before this massive rally took place. A second thing that stands out is we've had three similar lows that have taken place here, just below the 61.8% Fibonacci retracement of this advance from March 2020 up into the high in February 2021, and also the 50-week simple moving average, which comes in now currently at spot 7.5. Those levels have been support on any weakness that has taken place since the March crash, or the May crash, sorry. So if you're looking for levels to buy against, that would be your ever level. It's right there, anywhere between the 50-week simple moving average and the lows that we saw here. I believe the lowest point is spot 6.7. That would be your entry price if you want to buy on weakness. Let's turn to the daily chart. You can see we have a very clear double bottom pattern that has been formed with a trigger price coming in at spot 9.3 and a measured move of 29%, which would take us up over 1.20. In the path of that particular measured move stands the 50-day simple moving average, which comes in at spot 8.7. Then you have the anchored VWAP I mentioned at spot 9.2, and then the 200-day simple moving average at 1.04. So at this point, I wouldn't be a buyer of Algo. I'd be waiting for a trigger of this double bottom pattern, which gives you a timely and a high probability entry point. Otherwise, I would let it, drift below the 50-day simple moving average, come down, whatever it intends to do at this point. You could even get a double bottom with candle, which is a possibility. If you own Algo, I'd use a daily close below the 61.8% retracement of the advance from the 2020 low as your stop. I would not be a holder down into here. It's an unnecessary risk to take on. If you do, obviously, a daily close below this range, which is around spot 6.7, is a huge warning sign, and you should not be in Algo at that point. So just to review, you look for the double bottom trigger, where the 50-day simple moving average resistance and the anchored VWAP and the 200-day, if price strength resumes in Algo. On the downside, if you do own it, I would use the 61.8% retracement level of the rally from the 2020 low as your stop. If you want to give it more space, you definitely don't want to be in it below spot 6.7, these 3 lows here.